All right. It looks like most of you have mastered this idea of journalizing transactions. I'm really proud of you for really taking that on and embracing it. I like journalizing as well, and so I hope you continue to practice that. And so you've noticed with the journal transactions that we've been doing, they make reference to all of these source documents, and we've described why these source documents are so important and the purpose that they serve. They're this objective evidence that we get from third parties that prove that the transaction occurred and provide all of the details we need to be able to record the transaction. So we've learned a little bit about source documents, but we're going to delve into this a little deeper. So join me as we go through all of the different types of source documents that you will come across as we continue this course. So this is the second part of Chapter 6. It's Chapter 6-2. And we're going to look at the rest of the source documents that you need to know and be able to record the transactions for. So a lot of this will be review. So let's go on. A source document, like I said, is a business paper that shows the nature of the transaction and includes all the details of the transaction needed for accounting. It is what we said before, objective evidence, and helps us to ensure that we're meeting the objectivity principle from our accounting standards. So here's our first one. I'm going to close me because these slides are quite busy. So here's our first one here, and we have a cash sales slip. So this is like if you went to the local hardware store in your small town in Wainfleet, and you went to the local hardware store and they wrote out a cash sales slip for you. So it's not very often you see these things very often anymore, but for small business to business types of transactions, you will see these. So a cash sales slip is a business form showing the details of the transaction where goods or services are sold to a customer for cash. So let's look at the parts of it. So we have the letterhead. This is the seller, okay? This is the person who sells the item. This is the customer, D. Peterson. Oh my goodness, I can't type or write, This is the customer. We have the date, which is March the 4th. We have the details of what was purchased, the quantity, the description, the price, and the amount. And then we have the total amount that is owed. And it's a cash sales slip, so we know that D. Peterson paid this $35.90 in cash. We have the cash sales slip number, which is a numerical number, 1234. And the next cash sales slip that would be written out would be 1235. And then notice here we have 3 copies. This copy here, okay, will go to the customer. This copy here will go to our accounting department. And this file copy here will stay at the front desk of the business and go into our records there so we can look up that purchase or that sale a little later on. So we have 3 copies of that. So what I'd like you to do is pause me right now and try to write the journal entry that would go with this transaction for a cash sales slip. All right, moving on. The next type of source document that you're going to see reference to often is a sales invoice, okay? And a sales invoice is just like a cash sales slip, only a sales invoice is a business form showing the details of goods and services sold on account. And that's really the key, is the on account piece. Oops. On account. That is really, really important. So this is always going to be an accounts receivable. So again, we've got the name of the seller, okay? We've got the name of the company to be charged, which is the customer, right? This is our customer. This refers to our customer, okay? This part here, right here, the SS belt works. We have the invoice date, and then we have the terms, and this net 30 days means that this amount, $835, is due within 30 days of March 5th. So it's due by April the 5th. And then we also have the details of what was purchased, the quantity, the description, the price, and the amount. And we have the number of the invoice. So 7198. And again, the next invoice would be 7199. And then we have a whole bunch of copies here. We have 5 copies. So we've got customer's copy and customer's copy. So two copies go to the customer. We have our accounting department, our shipping department, who's going to send out those products to the customer, and a file copy that we keep in the business office. And so again, I'd like you to please write the general journal transaction for this particular source document. So when we see a sales invoice, what is the journal entry going to be? Okay. Next, we're going to be looking at a point of sale. So anybody who has a part-time job, you probably use a point of sale. At the end of a shift, if you have a cash register, at the end of the shift, the manager or yourself will print off a point of sale summary. So these are all the transactions that came from the cash register throughout the day. So my husband does this every night when he closes his business. He prints this document off and then keeps it with all his sales records, his transactions for the day. But this is the summary, and it shows me how much sales he made that day, and how many were Visa, how many were MasterCard, and how many were debit, for a total of this. Now, these don't really matter, Visa, MasterCard, or debit, because they're all considered cash. All of those things, the Visa and the MasterCard, these amounts actually automatically get deposited to my bank account at the end of the day, as well as the debit transaction. So this is actually considered kind of a cash transaction. So debit and credit cards are often used to pay for transactions. A point of sale terminal or a cash register records these transactions and will create a point of sale summary for the end of the day. So this is still a cash, this is cash sales. So again, pause me and then record the general journal transaction that goes here. Good, hopefully you've got that down. We're going to carry on. So now we're going to look at something called a purchase invoice. And so a purchase invoice looks very similar to a sales invoice, only it's from the point of view of the customer. So if we were Masthead Marine, in this case we are, we have purchased something from General Engineering. So this is the company that we purchased something from. So this is our supplier, our vendor or our supplier. And then this is us, and we purchased a lift chair and replaced a cogwheel and mobile hoist. And so the total cost of all of this was $241.50. So we owe that money to General Engineering. And here's the purchase invoice number 4123. And notice we don't have the copies because we got sent this invoice from General Engineering, and so we only have a copy that we send to our accounting department. And as well, it shows us that it is due net 30 days, so we have to pay General Engineering by April the 5th. So when we purchase something, in this case here, we have done some repairs. So I'm going to tell you what account you're going to debit. You're going to debit repairs expense. Okay? And then you're going to credit accounts payable General Engineering. So anytime you see a purchase invoice, you're always going to credit accounts payable, and you'll debit whatever it is that you purchase. So whether it was an asset or an expense, you're going to debit that account. Let's go on to the next one. Make sure you finish that transaction. So pause me, finish that transaction, write the amount in, and then let's move on. So now we have another purchase invoice. Similar situation. I'm not sure why it says too slow here, but anyway, I'm going to cross that off. Similar situation, but here we've purchased something, some Coleman posts. So now we're going to debit our equipment instead of an expense. Okay. of $240, and we're going to credit accounts payable and Coleman Boats. So same type of source document, a purchase invoice, but we have a different account to debit. So they wanted you to see that. Pause me, finish writing that down, and then continue. The next kind of source document is a check, and you've seen this reference in a lot of transaction where it says a check has been written. Every time a check has been written, anytime a check has been written, it means that our cash is going down, or we're going to credit, our cash or our bank. Okay? You're always going to credit cash or bank anytime you see a check copy. So let's look at a check for a second, because maybe you've never seen a check before. So we're Masthead Marine, so we've got our letterhead on the check. The check number is 1011. It was written on March the 6th, and we're writing the check to Sterling Spars, which is one of our suppliers, and we're writing the check for $1,802.90. And so that is also written out in long form, $1,802.90. This is the bank that we use. So this is our bank. This is Masthead Marine's bank, the commercial bank. And the signing authority at Masthead Marine is David Scott. These numbers here reference what our account number is with that branch. And then we have this second thing called, this is our check copy down here, and it tells me that this $1,802 is made up of paying off an invoice 342 and paying off invoice 406. So it's providing the details of what invoices I'm paying off. This is going to be important to Sterling Spars so that they know which invoices have been paid off for them. So we're going to have our accounting department copy and our file copy, and we're going to mail, so see this line? We're going to cut this off and mail this check to Sterling Spars. So when we pay off Sterling Spars, what's going to be our accounting entry? Remember, you're always going to credit bank or cash. Okay? All right, unpause me, and now we're going to go on to cash receipts. So this is a cash receipts daily summary. So I want you to picture yourself working at a law firm. And you're working at the reception office and all the mail, you're checking the mail for the day, and you get 4 or 5 or 3 checks from some customers that owe you money. They've sent those checks in the mail. So when you are the receptionist, you're going to make a cash receipts daily summary, which means that you're going to record each of the checks that you received from customers. So in this case, Masthead Marine received a check from A. Baldwin, F. Perry, and Pier 10 Marina. And A. Baldwin paid off some of his accounts receivable. F. Perry paid off this invoice. Pier 10 paid off this invoice and this invoice. So the total amount of cash that I received on March the 9th in the mail was $2,142.24. So I'm going to do this transaction with you. We're going to debit our bank account for the full amount, $2,142.24, and we're going to credit each of the accounts receivable. A. Baldwin and F. Perry and Pier 10 Marina. Okay, and we're going to write those figures in there: 375, 965.52, and 801.72. The next one is our bank debit advice. Now this is when the bank takes money out of our business for what we owe them. So in this case here we have a bank loan with them, and we owe them $113.50. And the bank is genius because they're just able to take that money right out of our business. They don't even have to ask. And they just send us an information. So in this situation here, you're going to debit your bank charges, and you're going to credit bank for the amount of $113.50. And I think that's